These headlines are crazy. Compass is laying off workers, Redfin is laying off workers, there's a recession coming, and interest rates are skyrocketing. What the hell is going on in this real estate market? And we are here to discuss that. Are we about to enter a crash? No. Short answer is no. So let's talk about, first off, all these real estate companies who are laying off employees. Two of them, right, Compass and Redfin, are publicly traded companies, right? So Compass is laying off about 10%, and I think they had about $500 million loss last year, and Redfin is laying off about 8% of their workforce, and they had about a little bit over $100 million of loss. That's a lot of money, but you have to realize these are publicly traded companies that basically go up and down in value based on what people perceive, right? So people are scared in this general stock market right now. Prices have been correcting, and so guess what? People are selling stock. Does that necessarily mean that the whole real estate market is in trouble? No, not at all. Actually, a lot of the traditional real estate companies have actually made a lot of money. You know why? Because 2020 and 2021 were the hottest real estate markets ever, like on the books, right? So if you're not making money in those 2 years, that's on you guys, right? So for these companies, so now Inman, they come out with a lot of real estate news, and they recently came out with an article that mentioned that 18 real estate companies were laying off some of their workforce. So what are these companies? About 10 were title and mortgage companies, right? So you have to realize that makes a lot of sense, because when interest rates go up, refinances go down, and they were heavily relying on those refinances, right? Because we were just coming through a time where interest rates were going down. Now they're coming back up, and yes, of course, there's going to be layoffs. They have to reduce your costs when you're not making as much income. So that makes sense there. Two of them were publicly traded. We already talked about Compass and Redfin. And then there was 6 startups that kind of were going under a little bit. They're unproven startups, makes sense. That's what happens when you're a startup. You either make it or you lose, and most of the time you lose, right? So everyone needs to relax. Now, what you need to realize is right now in 2022, 2020 and 2021, as I mentioned, were the hottest real estate markets ever. But in 2022, we're actually above where we were in 2019 right now. So we're still a healthy market. And yes, things are kind of cooling down. Prices of real estate is still expected to go up. And what happens during a crash? What happens during a recession? Smart investors put their money in real estate. You know why? It's not volatile. It's a physical asset that you own, and values don't generally change that much, and we're actually expected to increase still over time, because now this is why we're not going into a crash, guys. Supply is still incredibly low, and demand is still incredibly high. People still have to move. People still want to buy houses. The millennial market is increasing as the days go by. They need to move out of their parents' house, and the generation right after them, Gen Z, is right behind them, and they're looking to move also. So I don't see how this market is in a bubble. The 2008 crisis is completely different than what this crisis, or this is not even a crisis. The 2008 bubble is completely irrelevant when we're looking at today's market. What happened in 2008 was there was lending that was happening to people who didn't deserve a loan, right? So they were not looking at your credit. They were taking 0% down. There was no skin in the game. They were giving you short-term arms, right? So they were giving you great rates over the next, 3 to 5 years to 7 years. And then all of a sudden you were getting hit with all these interest rates that you couldn't really afford. They weren't looking at your income. We're in a completely different lending environment now. After that crisis, there were a lot of laws and a lot of rules that came into play that made sure that people that were getting money from banks deserved it and could actually pay those loans back. Right now, the defaults are still pretty low, historically, so that's not something to worry about. So, guys, when you're hearing all these the news, take a step back and try to look at what's going on in the market, right? Look at the numbers, look at the reasons why certain companies are going down and certain companies are continuously rising. Hanna, my company, is the largest privately owned company. We made a lot of money over the last 2 years. So you have to realize that the traditional real estate companies are doing quite well. The real estate market is continuing to increase, and we are in a good place.